Sillari here with RealSync, and today I'm super excited. I have another partner interview, a friend of mine that I've known for a long time in the business that just can provide a ton of value for you. And I'm super excited to have this conversation because I think it's really relevant right now, what you're doing in your business when it comes to profits and understanding your numbers. So I have Andy Mulholland here. Andy, thanks so much for being here, man. I really appreciate it, and I'm really looking forward to this conversation.
Thanks, Scott. Yeah, I appreciate it too. And I think, as you know, you're in the business of helping people really make sure they've got good, accurate numbers and data and stuff in their business and that things are working. And we kind of try to do the same thing with financials because we just know that that's an important thing as well. So good to be with you.
Yeah, man. So let's step back for a minute because I know a lot of the people that are probably watching or tuning in right now, they want to know, like, why should I listen to Andy? What's his experience? What does he know? So, and how'd you get to, this business of simple numbers, right? So take me back a little bit and kind of tell people a little bit about yourself and how you get started.
Well, yeah, no, I appreciate it because I think there's a lot of bookkeepers and accountant type people available, but not all of them have, or very few of them, if any, have real estate experience actually doing what a lot of us are trying to do. And I did. And in 2009, I became licensed. I guess it was late 2008. Started as a solo agent, just like everybody else. This was early on before there was even, I think at that point, Top Producer had just come out. If you remember that crazy old
I do.
System might even still be around. I don't know.
It is. They revamped it, but it's still a little dated.
Yeah. I mean, back then the cool thing was you could enter leads into a database and have automated email follow-ups. And I remember prior to that, I had probably been in the business 6 months and I had a notebook full of all the people I was talking to. And I'm like, there's no way I'm going to be able to keep all this organized. Yeah. So I started looking at what my options were, and Top Producer was about the only option. So it's amazing to think how far things have come since then. But I built a business over the course of about 10 years that allowed us to sell, our team in Minnesota sold 250, 300 units a year. So not a crazy huge business, but what I loved about it is highly profitable, and I didn't have to sell real estate anymore. I built a business that ran without me selling real estate and could provide the kind of revenue for myself and my family I never thought possible. And to me, that's the whole goal with this real estate for me, not for everybody, but for me personally. The model I wanted to build was one that allowed me to step out of sales and have a real business, because I tend to be more of an entrepreneurial minded person when it comes to that. So built that, and at age 34, retired from it and walked away, and we bought a farm and live on the farm with my wife and 4 kids and spend a bunch of time with them. And we travel now and have a home in Arizona that we spend some time in as well when it's cold up here in Minnesota. So that's kind of what I'm doing now. But it came from, over 10 years of kind of grinding through building a real estate business that served us.
Yeah. So. And so I think, what you mentioned in your story there's 2 types of business owners, right? There's the ones that want to do what you did and be able to step out and kind of just run it and be a part of it, or maybe completely step out and it runs itself. And then there's the others that do like to be involved and, are more maybe salespeople and do enjoy working with the sellers and the buyers still.
Right.
But either way, I think in order to have a really efficient and well-run business, you need to understand how to be profitable, right? And by exiting your business, Andy, you had to understand how to be profitable, right? So that's, tell me a little bit about how, full circle, you exited, bought the farm, obviously wanted to spend more time with your family and live the life that you want to live. And then how did we end up where you are now with running this business called Simple Numbers and working with real estate again?
Yeah, well, I mean, I was so horrible with financials early on, and it wasn't until I really wanted to step out of production that I realized how important it was that I get a grasp on this. And like you said, not that someone has to step out of production for this to become super important, but I think in real estate, to a certain degree, we are spoiled in the sense that it's one of the industries where, we can really make a lot of money in sales. Unlike maybe some other types of sales that are out there. You know, we sell a high ticket item and we get paid well to represent our clients well. And so, you know, that can kind of help us take for granted the amount of money that's coming in. And we tend to not look at financials sometimes. But when we start to build a team, if that's the route we go, and we start spending more money on stuff, and we're relying on others to produce and convert, all of a sudden we can get a little bit more, we can get a little tighter, and we're watching that a little bit closer. So I think that can prompt it. Although, like you said, even those individual agents really should be watching what's going on there. But it just becomes more prevalent, obviously, when you're starting a team. So because I was so bad at it, I had to get good at it. Because I got good at it, other people that knew me in my business said, hey, you're good at that. I'm not. Can you help me? And that's how
Right.
Simple Numbers was born. We started with one client. The top real estate team in Arkansas reached out to us, and we started doing all of their financials for them, just like we did for our business. And I started teaching them how to understand what was going on. And then it just led from one thing to the next. And now we help, I don't know, well over 130 of the top teams in the US with their financials each and every month.
Which is awesome. And obviously that process when you started, I'm assuming went very well, especially with that team in Arkansas, and you realize, oh, this is something that I can really help real estate teams with, right?
For sure. I mean, my passion comes from helping marriages stay together, helping, you know, real estate professionals maintain relationships with their children, because those things are close to my heart, because it's what I'm passionate about. And so often money will rip those things apart. I mean, I
Yeah.
had a friend in high school whose mom was a top producing real estate agent in my area. And he told me, like, in tears, as a high school kid, right, where we're supposed to be all big and tough and manly. And he's like, in tears, I never see my mom. She's never
Yeah.
here. Right. Like, and she was always on business. She was always, even on vacation, always selling. I get that. There's nothing wrong with that necessarily, but I think for a lot of people, they want and have passion around making sure that they are in this business for their family and because of what they want to do for their family. But oftentimes we end up getting sucked into it so much that we forget about why we started it in the first place. And a
Right.
lot of it has to do with the money.
Yeah.
Right. And so if we can get a grasp on it, have a plan around it, be tracking it regularly, all of a sudden the business becomes a blessing to our family and our relationships, and it doesn't become a suck on those things. And so that's why we're passionate about what we do. I frankly hate financials, which is hard to say when that's what we do for a living. But it's not about the financials. It's about what getting a grip on our money and our business financially can do for ourselves and others. And I think the others part is huge too. So many people come to me and they say, Andy, you know, I don't need to be too profitable because I want my team to make money too. And I say, look, it's not a zero-sum game. It's not one or the other. I think as business operators, if we have other people that we are responsible for underneath us, we have a responsibility to be profitable.
Yeah.
To be good stewards of the opportunity that we have created or that God has given us. Like, we have this opportunity, this business right in front of us. And if we are messy about it financially and we aren't clear where we're at financially and we don't have a plan financially, I think we're doing ourselves and all those in our circle a disservice.
Yeah.
And our agents will make more money if we can find a way to run this business profitably.
Well, I think you're right, man. And I think there's a level of like, that, as an agent and as you're, growing a small team to a medium-sized team and you're going through those steps, there's so much uncertainty around this type of business because it's like the ebb and flow of sales, right? And so what you're talking about is creating some certainty, what your money you're making, what money you're spending, and just having a really good understanding. So to kind of jump in, like, where do you start with somebody, like where should they start? Obviously there's different places you are in your business life, but if you were like talking to someone right now, like where would you start with them and what would you have them looking at?
Well, the biggest thing we try to get people to start thinking about is exactly what you said, which is a plan. Like, is it Jim Collins that says, begin with the end in mind? So many people put their head down and grind and work and build this business, whether they're a solo agent, team leader, brokerage owner. And then they look up 5 years later and they say, how am I doing? And they end up wherever they end up,
Right.
financially as well. Whatever the numbers are, the numbers are. And my advice to people is step one is you got to have a plan around what you're building. What do you want it to look like financially? How much money do you want to be walking away from the business with? And, what does that mean for our margins? What do we got to be doing financially in the business around our gross profit and our expenses and all that stuff? And you create a plan. So that's number one, have a plan. And then there's some basic financial, steps that you need to take when you start to really decide to run things like a business. Right. And I think most people have this stuff figured out, but there's some that just don't. Number one is you have to have separate business and personal bank accounts, right? It's fine when you're a solo agent and all the money you get paid from your broker comes into your personal account. I did it that way too. But as soon as we decide we're going to run this like a business, especially once we start bringing staff people and we start spending money on marketing and tech and all this stuff, we've got to separate the bank accounts. Okay. So that's basic number one.
Yeah.
Number two, for a lot of us, and you should talk to your CPA about this, but you've got to be set up as some sort of entity, a business entity, whether it's an S corporation or an LLC that's taxed as an S corp or something. You've got to make sure that you've got that in place. And that's taken care of.
Yeah.
And
well, before we keep going, I mean, talk about
yeah,
the benefits of the two things you just said. Obviously, the bank account, but then
right.
also, setting up a corp or LLC or whatever ends up being, because there's a lot of tax implications there. I think people may not understand, Andy, about the differences of just being a sole proprietor or just someone that's just taking bank checks into their personal bank account, right?
Right. I mean, there definitely are tax implications, and you need to work with your CPA to understand those. And I am careful to give tax advice because we are not accountants. We are bookkeepers and virtual CFOs for real estate companies. But yes, I mean, not only are there, but I think the biggest advantage of doing entities is there are tax advantages for you if you set it up that way.
Right.
And you're paying yourself a salary to keep the IRS happy, but then we can, do certain things when it's set up that way. I mean, the bank accounts, if we don't have separate bank accounts, business and personal, you cannot get clarity on the true health of the business.
Yeah.
Now, not to get too far in the weeds, it doesn't mean you can't run some personal or what we would call indirect expenses through the business. For example, legally, you can run certain business, or personal expenses through the business that, the IRS would consider a business expense. That's great. But so you can still do that. For example, maybe, travel. Maybe you go on a real estate conference, to a real estate conference, and you enjoy it personally, but it's a business event. You're going to run that through the business. Some could argue that maybe that's a personal event if you're going to stay there a day or two extra or something. I don't know. Some may say, no, that's a personal event. Some maybe say it's a business event. If you're going to run it through the business, that's fine. You can still do those things to decrease your tax liability, but we have to have separate accounts for your personal mortgage, your groceries, your things that really should not be run through the business.
Right.
And then you're going to get better clarity on the true health of what's going on in your real estate business. Yeah.
I love that.
Sure. Yeah.
All right. So bank account, set up an entity. What are some of the next things that you advise or that you would go through with somebody, as they're trying to execute on this plan we're talking about, right?
Yeah. I mean, to me, you got to have somebody doing your books for you in a software. Some of you could get away with doing it yourself early on, but frankly, it's such a low dollar per hour activity that anyone that's looking to kind of delegate and elevate, you need books. Don't get me wrong. They're super important, but you should not be doing manual data entry and classification of your expenses and things like that. Your time is better spent, doing what we call lead generation and conversion time, especially early on. So you've got to hire somebody to do the books, but you've got to have a software of some kind. I don't know how many times I've talked to somebody and they say, yeah, I've got it in a spreadsheet. And while you might be able to get away with that for tax purposes, it really doesn't help you truly understand what's going on health-wise in your business.
Yeah.
There's so many tools and things in QuickBooks that we can use. So we suggest QuickBooks Online, but some sort of program that you can have your books. And then you need a real estate specific chart of accounts. And when I first started in real estate, I didn't even know what chart of accounts was. Okay.
I don't know what it is either.
Here's what it is. Real simple. It's how you organize your books. So it's the categories, both for expenses and for your cost of goods sold. It's how you organize the books.
Yeah. So
That's
what goes into
accounts.
what goes into what bucket, basically.
Right. And so many CPAs or bookkeepers do not have real estate experience, and they don't set up a real estate specific chart of accounts. You need one. You can get one on our website if you want one. There's a free download, but chart of accounts is super important when it comes to being, really understanding the health of the business. You need a real estate specific chart of accounts.
Yeah, especially because like the language of real estate, as we know, Andy, is much different than a lot of other businesses, right? So if you don't have experience working in real estate, you don't necessarily know what expenses or what things to look for when you're looking at a bank account, right? And
100%.
what expenses should be going to this or to that, So maybe give some examples of things that you've been able to identify or work on with somebody.
Well, the biggest one, the number one issue with this topic is that if you don't use a real estate specific chart of accounts, most CPAs miss 2 of the 5 main sections of a profit and loss. And these are like trained professionals, and they don't even include all 5. And let me tell you what they are. The first section of your P&L. By the way, we call these the simple numbers. There are 5 of them.
Yeah.
And if you don't understand real estate, you don't even typically include the first 2. But the first one is true top line revenue, or GCI, the total revenue from a sale, the transaction, the money that was generated in commission dollars from a sale. That's the true top line revenue before the broker got anything, before the agents on your team got anything. This is like true top line. That should be number 1. Then number 2 is what's called your cost of goods sold. I like to call it cost of services or cost of services provided. This is like your splits to your agent or your agents, your broker, if you pay your ISA a portion of the commission at closing.
Mm-hmm.
So those are the first 2 sections we have to have in your chart of accounts. Most bookkeepers don't include those 2. They start with number 3, which is what's called your gross profit. That's what you now have left. So you started, let's say it was a $10,000 commission check. It started with 10,000 top line. You paid your broker 1,000 and your agent 4,000. So that's 5,000. You now have $5,000 left in gross profit. That's where most bookkeepers start, because that's the amount that actually hits the team leader's bank account.
Right.
It's also called real revenue. But if we skip the first 2, we do not have clarity on what it is costing us to have a team as far as the cost of sale goes.
Right.
And we don't know what our gross profit margin is. And if that gross profit margin is too low, we don't have enough to spend on stuff and still have any profit left.
Right. So basically you're flying blind without the first 2, because
I sure think so. Especially
because you don't know how to make decisions. Then it'd be, if you can't figure out what a real profit is, how are you supposed to make any decisions on what you should be spending or not spending? Right.
For sure. And a lot of this depends on how much production the owner is still doing, because if you think about it, the gross profit margin changes, but depending on how much production the owner is doing. If the owner is doing all the production, the gross profit is pretty high because they're not paying splits to any agents. It all comes to them after they pay their broker a little bit.
Right.
But if they're doing, if their team's doing 50% and they're doing 50%, well, they're only paying splits on half of it and they're not paying splits on the other half. So that'll change your gross profit margin. So we just need to understand how much your gross profit margin should be based on how much production the owner is doing. And it changes depending on from one team to the next, how much production that owner is doing. If we don't know what that gross profit margin is, like you said, it's really hard to know how much do I have to spend and still have any money left for me. And I don't know, Scott, the number one thing I hear people complain is I don't think I'm making money on my team. But they don't even know. And so what I mean by that is the owner might be doing, let's just say $500,000 in their own personal production, but their net profit is like 300,000. In their mind, they're thinking, well, I'm making 300 grand. It's like, no, you're losing 200,000 on your team because you're basically taking 200 grand of the money you did and you're spending it on them, and you're losing money on your real estate business. And so until I got that, I didn't understand how important numbers were.
Yeah.
But once I understood that in my own business years ago, I was like, oh, okay, I got to fix this issue.
Right. Because you should be working towards it going the other direction. Right.
For sure. You should be making money on the real estate team, the deals your agents are doing, not losing money on your own production.
Right.
And until we understand gross profit and cost of goods sold and all those things, a lot of times we don't know that that's going on.
Yeah.
Or we do, and we just don't know how bad it actually is.
Right.
So that's why those are the first three sections: true top line revenue, cost of goods sold or cost of services. Then we have our gross profit. Then we look at our operating expenses.
Right.
So the operating expenses, we typically, and if you download our chart of accounts, you'll see this, there's typically three main sections of expenses to keep it real easy, right? We have lead gen and marketing, any dollar we spend to try to generate opportunity for our business. Then we have people expenses, so staff type people,
right,
like non-agent pay.
Mm-hmm.
And then we have overhead, which is everything else that isn't a lead gen or a people expense. And when we just break it, every dollar you spend is going to be in one of those three categories. Each one of those has a lot of subcategories, but those are the three main. Now we can start to have goals and targets around those three categories. For example, a lot of teams I see, their goal is to be somewhere around 30% of their true top line revenue in total expense, which is about 10% in each of those three categories.
Right.
So if they do $1 million in top line revenue, they're going to spend about 300 grand in total for operating expenses, which means 100 grand for lead gen marketing, 100 grand for people, and 100 grand for overhead. And that's kind of how they can every month look, am I on or off track with my plan?
Right.
Very simply and easily. And then of course, the final number of the 5 is your net profit. What do you now have left pre-tax, at the end of the day?
Right. Love that.
Yeah.
Yeah, real, as you say, simple numbers, but I wanted to jump back to like the third thing that you mentioned, because I feel like a lot of people get stuck there, and we kind of talked about this a little bit earlier, and they start comparing, contrasting, their profits or their business or their expenses or their whatever to others, but they really don't understand their numbers. And then they're comparing, it's kind of almost falsely, right, to other businesses because of how businesses are run so different.
For sure. I did this all the time. I remember sometimes being depressed because I would come back from like a conference and some person on stage was saying their profit margin. And I'm thinking like, oh man, mine's not even close to that.
Well, and they might not even be right when they're saying that on stage too, right?
Well, they might be right. But the thing about financials is they can be changed and tweaked to look however we want them to look to a certain degree.
Yeah.
At the end of the day, in those scenarios, I was comparing apples to oranges. We were not comparing true numbers. We were looking at one number and thinking we were looking at the same thing, and we weren't. Because in those examples, let's just give an example. I mean, you talk to somebody who has, let's just do the opposite. They say they have a 10% net profit. And you say, wow, I must be doing pretty good. I have like 60% net profit. So you're thinking I'm doing really well. But that person, for example, maybe they're 100% out of production and you're still doing 80% of your team's production. So you're not paying any split on 80% of the deals you're doing.
Right.
Plus maybe they are paying themselves a $500,000 salary as the owner every year, and you're not paying yourself any salary. All of a sudden, when we start actually looking at an apples to apples comparison, you might be exactly the same net profit margin. So you got to be careful when you're only asking what someone's net profit is, because in most cases, you are not comparing apples to apples. They might also not be comparing it against their true top line revenue. Like we talked about before, they might only be looking at a percentage of their gross profit, simple number 3, versus the true top line, which changes those margins. So just be careful is the idea there, that you don't either think you're, more profitable than you are, or that someone else is than you, when you're not really comparing apples to apples. And, I think the way we fix that issue, Scott, is that you really should pay yourself in three ways. when you are a real estate team leader and you're in production and you're kind of running your team, which I think a lot of us team leaders are, right?
Yeah.
You really should be paying yourself in 3 different forms within your real estate team. And it really comes down to like, which hat you are wearing, because you're wearing 3 different hats at any given time. Number 1, you are a producing real estate agent on your team. So you really should be paying yourself the same splits you're paying your agents whenever you do a deal.
Ah, interesting.
Okay. So if an agent gets 50% on a deal and you close the same type of deal, you should literally at closing pay yourself personally from your business account or from the broker that same split.
Right. Instead of, I mean, what have you seen most people do in that scenario?
They don't pay themselves anything.
Anything. Okay.
And then it goes to the bottom line, and then they end up either spending it because they have it, or their profit margin looks really high when it's actually not, if they were paying a different agent to do that.
Right. I like that.
So that's, you've got to plan for, though you're going to replace yourself one day, even if you have no intentions of doing that. Plan as though you're going to replace yourself one day. And if you had to replace yourself in that sales role, you'd have to pay somebody else the split. So
that's
pay it to yourself.
Yeah. That makes so much sense when you're saying it.
Yeah.
And I can't believe I've never heard that before, but it makes so much sense. Because
right.
you are doing multiple roles. You got to pay yourself for each of those roles, right?
Yeah. So that's the first one. The second one is a salary.
Yeah.
You need, because you are the team leader. And so if you ever replaced yourself as a team leader, you're going to have to pay somebody else to do that.
That's right.
So to get a true number on your net profit margin, you better be paying yourself a salary. Not to mention, if the IRS probably needs you to pay yourself a salary. If you're an S corp or other entities, you need to be paying yourself a salary.
Right.
And plus you can save taxes by doing it that way, by the way, as well. But ideally, you're paying yourself a market-based salary, that roughly the same amount you'd have to pay if you hired someone else to do that same team leader role.
Mm-hmm.
Now, you might say, well, I'm only doing it part-time because the other times I'm out in sales. Okay, fine. Then pay yourself for a part-time person to replace yourself, but pay yourself a market-based wage for whatever role you're in that team leader role. Right. And then the third one are profit distributions every quarter. Those are the 3 ways you need to get paid. Why the third one? Because you're an owner of the business.
Right.
So if you replaced yourself in the first 2, you'd still be getting profit distributions. Maybe you have a partner. You and your partner should be, and I see this all the time with partnerships. By the way, I rarely see partnerships work. I'll just put that out there. I think Dave Ramsey says is partnerships are the only ships that never sail or something like that. I don't know.
Yeah.
But it's tough. I'm not saying you can't do it, but it is tough. If you have a partnership and you don't pay yourself, neither one of you get paid on the first 2, and you're just splitting all the profits. Well, what if one of them is doing the majority of the production, the other one's in the back of the business doing no production? That's not fair. Right. So if we're really paying and the owners could maybe split the profit each quarter. Whoever's in ownership should be paid profit distributions, just like an owner of any business. So if every real estate team did it that way, then we could compare true net profit margins to each other. And we'd be truly comparing apples to apples. But when some teams are doing it that way and others are only doing some of it and others are doing none, we cannot compare net profit margins.
Right. It's impossible. Yeah. That makes sense.
That's my thought on that.
Yeah, absolutely. So talk to me. All right. So we're on this plan, right? And now we've dissected these 5 things and you're getting the numbers in order. How do I, as the owner, look at my P&L? Like, talk to me a little bit about the P&L and, making sense of it and maybe where I'm at each month,
Yes. Well, it all comes down to, in my opinion, what do you want your net profit margin to be?
Right.
And picturing it like a pie chart. And, I think for most teams I talk to, if the owner was 100% out of production, so not considering the owner's production, we want to be somewhere between a 20 and 25% net profit. So you could picture a piece of pie with a quarter of it cut out. That's our profit. We're going to split that with the government when it comes to pay taxes. That means we have 75% of the pie left. So when I look at a P&L, I want to first know, what do you want your net profit to be? If it's 25% and we're not there, then we need to figure out where the issue is. The good news is there's only 2 other places where that issue could be. And that's the other 2 pieces of the pie. We talked about we have 75% of the pie left. Well, that has to be split into 2 pieces. The operating expenses is going to be one piece, and the cost of goods sold to your agents and brokers splits is going to be the other. If one of them is way too big and the other one is the right size, then our net profit's going to be too small. If both of them are too big, our net profit's going to be really small. Like, there's only three pieces to every real estate financial pie. It's net profit, operating expenses, and cost of goods sold. And they all have to equal 100%. And so you can see if our net profit isn't where we want it to be, it's because one of the other two pieces is too big and we need to shrink it.
So give me some examples of like when this is off, or what you find when you're working with a business owner, and where they're making mistakes around those two pieces.
Yeah. So number one, they're either overspending, or number two, they have the wrong splits with their agents.
Right.
It's always one of the two. You got to remember, there are different real estate models that are out there.
I mean, there's a million of them. Right?
Well, I have found that there are about four main models, right?
Okay.
You've got like on the extremes, you've got the solo agent.
Yeah.
Right. You got the solo agent. They're not going to have much in cost of goods sold because they don't have any agents to pay. And they probably don't have a ton of operating expenses, but some. So their net profit's going to be huge. Their piece of the pie for net profit's going to be big. It should be big, or something's off.
Yeah.
Then you've got a model where, it's a tight knit team, or I call it the shark with the feeder fish. It's like one main agent who's doing all the production, and they have a couple feeder fish off to the side that they just give leftovers to. So they're called a team. They're not going to have a huge amount of cost of goods sold because they do most of the deals and they pay zero to their agents.
Yeah.
And they're not going to have a ton of operating expenses because they're not really providing a lot of value to the agents. They're just giving the agents the leftovers. That's the reason those agents are on that team.
Right.
Maybe they get a little help from admin, but that's about it. Otherwise, they're kind of on their own. We've all known, teams like that. It's the main shark who's always going to be the one going out there and feeding, and they're just going to give whatever they don't want to those other agents. Well, they're going to have a pretty high net profit too. The third model would be, more of a school of fish type team where, we kind of all have our role on the team. Maybe we have buyer's agents, listing agents, we have admin, we have listing coordinators, closing coordinators, buyer closing coordinators, we have marketing coordinator, and we're all about the same size, all swimming in the water together. And when we all turn, we all turn. We're all really trying to work as one unit. Well, I'm going to have a little higher cost of sale because there is no big one agent doing all the production. We're all doing about the same. So my cost of sales is going to be higher. My expenses are going to be a little higher because I've got a lot of support in place for these agents. And I'm not just giving them leftovers. I'm literally giving them leads. I'm giving them training. I'm giving support. So my net profit's going to be a little bit lower, but the whole goal is that I have a higher top line revenue than the shark and the solo agent. So that's going to determine what my margin should be. And then we've got the kind of the final model. I call it like a team ridge or a brokerage. To me, they're both the same for the most part, right? 50, 60 agents. They all kind of are doing their own thing, but yet we all work under the same umbrella. We share admin, but we all kind of do our own SOI deals. Like we're a team, but not really a team. We're a team of individuals. You could say it that way.
Yeah.
And we're basically sharing costs. Well, the cost of goods sold on that model is going to be really big because usually the splits are very high to the agents in that model.
Right.
And our expenses are still going to be decent because we're usually providing a decent amount of value for the agent. So the net profit margin on a team ridge model is usually pretty small, like 8 to 10%. And so why? Because the cost of goods sold so high.
Yeah.
So that's what I go back to the beginning of what we talked about. Which model are you trying to build?
Right.
What are you building next? Maybe it's a phase. You move up the ladder.
Yeah.
But then your margins need to be different depending on what you are trying to build. And then you've got to stick to those. So if you're paying your agents 75% splits, you cannot go out and spend 30% on operating expenses because you're going to lose 5% because it has to equal 100. Right? That's where I see people mess up. They have splits like a team ridge and they have expenses like a school of fish model where they're higher and it doesn't add up. And then what happens is they end up having to keep selling real estate personally to float the business.
Yeah.
That's where you get stuck. And now you stuck in production forever.
Right.
And your CPA will tell you you're making money because they don't understand that. And they'll look at your profit and loss. They say, yeah, there's a great healthy profit on here. Not realizing the majority of that money came from the owner selling the real estate themselves personally. So if you want to build a model where you don't have to sell every piece of real estate or any to be able to make money on your business, and to me, that's the definition of business. You should be able to leave for 3 months, come back, and the business is still moving forward and profitable. And if that's not the case, then you don't necessarily have a business yet.
Yeah.
So anyway, that's a long answer to your question, but I think that is how we need to start looking at our financials and that visual pie, and understanding there are only 3 pieces, the most important one being net profit. How big do I want that piece to be? And then I have to split the remaining up between operating expenses and cost of goods sold.
And I think what you're hitting on, Andy, right now is like why so many people sit in those first 2 categories where their net profit's real high, because there's like, they don't understand how to take that next step and stay profitable. And so it's almost like a scarcity mindset. Like you're kind of scared to do that because
100%.
right? And like we
Yes.
see it all the time, because you go to these big conferences and you hear people talking about, I run this huge team and we're still profitable and blah, blah, blah. But they're like, oh my God, like I don't know how to make that step. I don't know what my numbers should be if I do make this step. How do I like not end up in this position where you're still on the hamster wheel with 50 people you're having to manage? It sounds like a nightmare, right?
Yes, I've been there.
Yeah.
I've literally been there myself, probably back in 2013, somewhere in that range, feeling that exact same way. And what I did was I just did the business anyway, and it didn't work right away. I hired a couple agents, started spending money, and all of a sudden I'm like, oh my gosh, I was trying to get more freedom in my life. And what I ended up doing was creating more dependency on me to go out and sell to pay for all this stuff. So yeah, it's tough. Here's how you fix it, I think. You watch out for lifestyle creep as you start making money selling as a solo agent. That's when you screw this up for yourself. Because imagine a solo agent, okay, like me, I drove a limousine before I got into real estate, right? Like I was not used to making much money, and got into real estate, sold 28 homes my first year, made over $130,000. I was like, I couldn't even imagine making 6 figures personally. I don't have a college education. Like this was just like unbelievable to me. And guess what was the first thing I did? I went out and bought a nice fancy car. Right?
Yeah. I've made that mistake too.
So then the next year comes, and my wife wanted to get out of being a nurse. She was a nurse at the Mayo Clinic at the time, and we had our first son, and we're planning to have more. And I thought, okay, let's get her out. All of a sudden our income went down from her income. Okay, a little tighter. And now we bought things were still good in real estate. I was growing second, third year, bought a big old house. Okay, so now I'm stuck, because if I want to build a team, it makes it that much more difficult when I am so dependent on all that revenue coming in for me personally, and I'm living off of it.
Yeah.
So what I think the fix is right from the get-go, if I did it over again as a solo agent, I would start running it like a business from day one, meaning I would pay myself the same split I would if I had an agent on my team, even if I didn't have agents. I would pay myself a salary and learn to live off that salary, meaning my monthly expenses at home better be covered by that salary or pretty close to it.
Yeah.
Then I would pay myself profit distributions on what's left at the end of the quarter. I would run a system like Profit First to help me do that, by the way. If you haven't read it, Mike Michalowicz's Profit First book, I run it in all my businesses. I encourage everybody to run a system like that to help us stay disciplined to being profitable.
Say the book again. Say it again.
Profit First.
Profit First. Right.
By Mike Michalowicz.
Okay.
I would run that system. It's just a system for tricking your brain to think you don't have all this money to just go burn.
No, it's so smart. I mean, this applies to people in almost so many different industries, right? Because
100%.
Because you overextend yourself and then you're stuck, right?
Yeah, it's called bank balance accounting. You look at your bank balance and you say, wow, I got a lot of money in there. I'm going to the car dealership to buy myself a new car. Oh, I got a lot of money in there. It's time to buy a new house. Instead, you have buckets, and you make sure that these buckets, are you plan for. I mean, we didn't even talk about taxes. First couple of years of my business.
Yeah.
I'm like, oh shoot, I got to pay taxes. I didn't have cash for. I remember having to sell a sports car that I had in the garage to pay for taxes because I didn't think about it, right? So profit first,
I
fix.
I have a buddy that's dealing with it right now. He's a
Yeah.
realtor, and he's new in the business, and he made a bunch of money last year, and it's slower this year, and he's got all these taxes to pay.
So this is the examples of what I call lifestyle creep.
Yep.
And it will suck the wind out of your sails around building a team if you let it get out of control. You can get out of it. I did, and I was in it, but it took longer because I did it that way than if I had been more disciplined, paid myself those 3 ways we talked about, was disciplined to a model. And now I could start building a team a lot quicker. So Gary Vaynerchuk talks a lot about this too, of like, when you're building a business, like you don't get to live, stop buying the fancy stuff and thinking you got to do all this stuff, because it's only going to slow you down in building a true business where the true wealth comes from later,
Yeah.
So that would be my advice to avoid that problem.
No, it's really good advice. And I'm sure there's people watching right now that this is hitting home with them, right? And so if you're watching this right now, you can make some of these adjustments, right? And you can start right now. So I want to talk about one more thing before we wrap this up, Andy. And this has been fantastic. It's such good information. And I know it's given a lot of people clarity, right? What things are you seeing, based on the current market that a lot of realtors are in right now? What things are you seeing that they're maybe dealing with financially, or maybe things that you're having to advise them on, as this is a different market than it was 4 or 5 years ago, even mid 2015, 20, all the way even after COVID, when it went bananas,
Right.
Sales are down 30 to 50% depending on the market, right? So what are some of the things that you're seeing or dealing with, or advising people on right now?
I mean, there's a number of things that come to mind. I mean, definitely, as always, I believe mindset's huge, and we cannot tell ourselves that there isn't opportunity in this market to increase market share. Right. There's going to be tons of people who do that. And those are the ones that tell themselves that that's there.
Right. Because there's a lot of people leaving that that were just kind of, getting little hand-me-downs, and now they don't understand how to get sales. Right. So they're leaving the business.
Totally.
Yeah.
So that's number one. I think number two, kind of a tangible thing that I see kind of hurt even big teams. I mean, I just did a P&L review with a $10 million team that we do books for. And what we identified with their books is they went from $8.5 million in revenue in 2022 to $10 million in revenue in 2023. They increased $1.5 million in top line revenue, and they went down in net profit. Okay. So not good.
Not good at all.
You don't want to grow just for growth's sake, especially growing and then decreasing the actual, not net profit margin, but the dollar amount. They actually made fewer actual dollars in profit, and they went up $1.5 million. Okay. So we had to figure out how, why, what is going on here? They had just hired us to come in and go through the books. What we found was, and I see this more often now, is that they had made a shift from company generated leads to paid referral based lead sources, Zillow specifically.
Yeah.
With a 35% price tag.
Right.
Too many times I see people say, well, it doesn't cost me anything. No, it does. It does. Yeah. Well, on Flex, I don't have to pay a monthly fee. I know, but it costs you 35 to 45% at closing. And those deals that your agents are doing with Zillow, with those Flex fees, they're not out there doing other deals that don't have that attached to it.
Right. Or they're not doing the database deals, right? Or not doing things that you've already paid for, all the generated leads you already paid for over the years. Right.
100%. Their focus shifts. And as humans, we're going to go to the path of least resistance. And those Zillow leads are good deals.
Yeah.
But at 35, 45% attached to them, plus then you got to pay the split to the broker and the agent, and you got to pay all your expenses. They were actually losing money every time they did a Zillow deal.
Yeah.
And that's where the decrease in net profit came from. So guess what their strategy is? This is what I love about bookkeeping. So many people do books for tax purposes, and they are missing so much value in their books for strategy purposes, business decisions. So they now knew that was an issue. And what did they find out? That we dug into their sales manager's daily activities, and their sales manager was not holding the team accountable to those company generated leads. And the sales manager was not doing a good job of training them and holding them accountable to doing that stuff, because their focus was over there, like you said, on Zillow leads. So guess what, sales manager, we're going to start holding you accountable. Your pay is going to be tied to more leading indicators in the business, like how many appointments we set, met, and sign, not from Zillow, but from company generated deals. We're also going to implement a past client program that we kind of have been relaxed on for a while. And all
Right.
of a sudden, those numbers start to shift.
Yeah.
So that's what good sets of books and a good understanding in a simplified way can help us do, even on a $10 million real estate team.
It's huge because that type of example applies to every single person's business of understanding by understanding your numbers and understanding how you're generating revenue and gross revenue and net and everything else that we've talked about today, you're able to easily advise them on how to make a transition so that they're going to be making more money and profitable, right?
Mm-hmm.
It's huge, man.
Yeah.
It's huge.
And too often in situations like that, the team just focuses on, well, we're growing, we got more
Yeah.
agents, we're doing more deals, so it
We
must
did
be
10
better.
million instead of 8.5. Let's
Yeah.
keep going.
And
And
I'm on stage
you're
at this
kind of going
event.
blind, and
Yeah.
it probably makes it worse the bigger than you get, right? In that scenario.
Yeah, definitely can, or at least it can sting a little bit more for sure. So
Yeah.
yeah. So anyway, yeah, that's my thought there on that. I mean, there's probably other things too, but that's the one that definitely comes to mind around. I think as an industry, I see a lot of people that went that direction. Even if it's not Zillow, it's other paid leads, and those are getting more expensive and less effective. And we're neglecting the low hanging fruit sitting right over here. If a little more work needs to be put in, but man, that can be such an effective way to increase our profitability. The second thing I want to say, the second thing too, because I think this is equally as much of an issue when I think about teams that aren't as profitable as they would like to be. They are not understanding the difference between the buy side and the listing side of the business when it comes to splits with their agents. They're paying the exact same splits on both sides. And the most common one I see is 50-50. Well, on the listing side, you cannot afford to pay 50%, maybe on an agent generated deal. But if you're generating a listing lead for that agent, and especially if you got an ISA department or something setting that appointment for the listing agent, and all they need to go do is go out and sign that listing and then negotiate the deal when it comes in, because listing coordinators handle just about everything else. We cannot afford to pay them 50% on those deals. So
Right.
we need a different split model on the buy side than the listing side in most cases. And if you don't feel like you can, it means we need to add more value to the listing side of that business. You need to leverage your agents more with inbound seller leads, with possibly ISA set appointments, and definitely with admin systems and people in place. So your agents can be like a surgeon on the listing side. They come in, it's prep, they come in and make their cut and they walk out.
Right. Full
And if
sales, which is
yeah,
what you want to be, right? And then for
right.
them, if you do it right, they're doing 2 or 3 more deals a month or whatever, and they're making a lot more money, and then you're making more money too.
And they have a better lifestyle. I mean, I had 2 listing agents who were
Yeah.
making well over $200,000 a year each, and worked 9 to 5 with preset appointments. And all they did was meet with sellers and negotiate offers. Like, talk about a lifestyle for a real estate agent. Maybe not all agents want that, but you can find a handful of people who would love that lifestyle.
Yeah.
They never had to work with buyers and they could each make 200 grand a year. Like, those people will be at your doorstep begging for a job. But at 50%, there's no money to be made. So the real money is on that listing side of the business. The margin is, in my opinion, because you can leverage those deals with admin and systems that you just can't do on the buy side.
Right. Well, that's where there's more cost. There's a bigger cost burden too on the listing
I mean,
side,
that
right?
too. Yeah. If you're
Right.
paying for
And
photos and staging and all that stuff, yes,
right.
especially.
So that's why you can't pay those splits that high, right?
Yeah.
I mean,
right.
Yeah.
Yeah. And if you want to start exiting production, you're not going to want to exit production, especially on the listing side. You might be happy to get buyers up at 50% splits to your agents, but at 50% on the listing side, listings are too easy to do in a lot of cases, especially if you've got good staff, that you're going to be like, no, for 50%, I'll just hang on to it.
Right.
And at 30%, it makes sense to hand it off to a listing agent. Wipe your hands clean and no longer be in production. But at 50%, it just doesn't. So I'm not saying there's a certain split model you have to run, but I'm just saying be aware that for a lot of real estate teams that scale, they get stuck when they have the same splits on both sides of the business. So just be aware of it.
Awesome, man. I love it. All right, Andy. This has been fantastic, man. I really appreciate it. if someone's watching, like, and they're like, oh my God, I need to talk to Andy. I need to get this figured out. I need to have a plan in place. I need to get my numbers in order. How should they contact you? How should they reach out to you?
Yeah. Our website is simple-numbers.com. They can sure go there. I would encourage people to look into our stuff there before they, set an appointment with us, because I want to make sure they feel it's a good fit there. But there is a button for a free consult. I will go through with you on our homepage. There's a button you can schedule a free strategy call. I'm happy to go through your numbers with you and kind of give you some thoughts and talk about how we might be able to help. There are also a couple free tools. If you already have a bookkeeper and you want them to start using a real estate chart of accounts, there is a button called free tools on our site where there's a chart of accounts they can download and start using.
That's
And
awesome.
then we also have a budgeting tool called the 5-minute budget they can use and download for free as well. So hopefully there's some helpful resources there for you.
Awesome, man.
Yeah.
Andy, thank you again so much. I really appreciate it. This has been fantastic. Great information, of course. And Scott with RealSync, if you have any integration or automation needs, you know where to find us. And I appreciate it, man. I'll talk to you soon.